Welcome to Investors Insights. Our topic today is earning it. I am really honored today to introduce you to our newest member of the Portfolio Strategies Group, Ty Miller. Ty, welcome to our group. And also distinguished colleagues who I've thoroughly enjoyed working with for years, Adam Van Zandt and Trey Booth. Gentlemen, thanks for being with me today. So looking forward to our discussion. Had great discussion. Ty, as the first time you've done a vlog with us, why don't we go straight into the fact of retail sales? I think you had some insight in this morning's meeting, and it ties right into where Trey Booth then just unloaded on us about earnings, and Adam followed back up to talk about technical indicators and how earnings can move markets. So with that, Ty, talk a little bit about retail sales and what you're seeing out there.
Thanks, Greg. Appreciate the introduction. Excited to be here. The consumer is pretty strong right now. Personal savings rate is higher than it was before COVID, even though it's off of some elevated levels compared to when we were getting stimulus. But retail sales came in last week at 0.7% when they were expected to decline 0.2%. And they're actually up from pre-COVID levels even. The consumer is very strong and strapped with cash right now.
Well, and I think that's great insight there. You're right. We're getting ready to head towards holiday season. A lot of things going on as we watch retail sales closely. If the consumer's spending money, that impacts earnings, and we're thrilled with that. And Trey, you did an awesome job this morning just showing us about what's taking place with corporate earnings. Elaborate on that.
Yeah, absolutely. So it's earnings season is in its infancy. Only 41 of the S&P 500 companies have reported, but what the market's done in those earnings reports has been interesting. One big point is that 2022 or the next 12-month earning expectations started to rise again after being pretty much flat for 4 weeks at 214. We saw the number tick up. So that means that the expectations and the projections that are being put out there is pushing the whole market's earnings higher, which is great to see. And then on top of that, though, the market is really reacting to the results. If you beat your expectations, the company's stock are only up 1.1%. However, if you miss, you're down 4.5%. So there's definitely a lot of built-in volatility. It looks to us that there may be a little bit of momentum to the downside right now, where you better not only match but beat expectations. If you come anywhere short, the market's going to punish you. So that's a lot of information right there. We think it's going to be a volatile earnings season, but an extremely informative one. There's a lot of talk of bottlenecks, of supply chain issues, but to Ty's point, the consumer, the most up-to-date data we have, last week consumer data, it's very real time. It's still very strong. And so as long as the consumer's buying, we're seeing sales improve, we're seeing earnings improve. I think that leads to a very strong market. It's hard for the market really to stay down if you have positive earnings and low interest rates. And that's where we are right now.
Yeah, and let me say this, because we continue to track that information throughout the week in our social media, LinkedIn, Twitter, Facebook. You know, the discussion and data you guys are giving this morning continues throughout the week. And I'd also encourage, because Trey, you've done an awesome job on this in previous vlogs, just getting people to understand the importance of earnings this year.
That's right. Yeah, we've spent a lot of time on this vlog talking about earnings. But a couple of weeks ago, we talked about how important this is and how reactive the market's going to be to earnings. And that's really surprisingly playing out, not just the extreme that we expected, but even more extreme. So I think we could see some volatility, and earnings really can drive the market at the end of the day. This week, we're going to see 72 companies report of the S&P 500 companies. So another big data point this week. So if you see the market rocking, it's not necessarily the market. It may be what within the market is moving.
Very true. And Adam, you've been busy. All this volatility has caused us to really focus on technical analysis. And we also continue to highlight where the strong points, the support levels are, the resistant levels are. With this kind of earnings momentum, retail sales, we should see some strength in the market. So talk to us about those different ranges.
Absolutely. And you alluded to it, Greg. So we did have some volatility last week. The S&P 500 ended up closing up strong for the week at 4,471. That gives us a new resistance level of 4,500 with a new support level of 4,440. The 50-day moving average is currently sitting at 4,437. So now we're seeing the 50-year moving day average kind of creep up and be that floor that we were thinking it was going to be. So if we continue to see some consumer confidence in the markets, along with earnings, as Trey talked about, then we can bring some of those fundamentals into the equation and kind of bounce them off of our technical analysis and hopefully finish this year strong.
Yeah, and talking about this year, guys, it's hard to believe, but in less than 90 days, we will be ringing the bell of 2022. So there's a lot going on. We're going to keep you updated with all our communications, and we hope you have a great week as we head towards the end of October. Take care, and thanks for watching.